So the nice thing with this little code section though is, well, if I have this type of business, my income might be pretty nice, but I think I might sell. And if you're thinking of selling in the next couple of years, it might make sense to start looking to set up one of these, a C Corp. And I would say that's really good if you've got maybe an employee, a couple of employees, if you have a lot of marketing, if you've got a lot of finance or other things that you're doing. If you set one up today, one of the requirements too is you have to own it for at least 3 years. 3 years, that'll get you 50% of this 15 million. So 7.5, you can, sell it 7.5. That's great. That's not a bad day either. If you hold it 4 years, then it gets you 75%. And then 5 years, you get the full benefit, 100%. So I think one of the big things I would say to just kind of prevent some of those failures too is just knowing what questions to ask. So if I know I might sell in the future, how am I set up today to make sure I maximize my walkaway number? That's the big thing I would push for.
Next question.
Yeah.
So you're saying if you have for a sequel, you're entitled to 3 years, you're entitled to 50%?
50% of that 15 million. That's right. Yep. So it's a pretty good deal. The one catch too that I didn't mention is if you're in any sort of professional field, so I know there's a couple of finance folks, there's some other folks that it's tied to more your profession, this code section doesn't necessarily apply. But if you have marketing, if you've got staffing, if you've got IT, any of that stuff, if we push it into this entity, that can apply for it. So it's all in how you kind of show yourself to the government when you go to sell. That's going to hit you the best.
So there got to be a reason that they're pushing you to get in the C Corp. Do they get more taxes than you in the C Corp or something?
Well, so that's the other kind of neat thing too. So this one, the most you should ever pay as a flow through is 29.6% federally. The most as a C Corp you're ever going to pay federally is 21%. But there's a catch. The one catch with a C Corp is if I want to take money out of this C Corp business, I already paid tax, right? I paid tax as a business at 21%. But then if I want to get it out to me, how do I get it out? I've got to take it as a wage, or maybe I've got to take it as a dividend. That hits me as taxes. So they can double tax you. But there's a third way. The third way is you can take it out as a loan. And as a loan. The fun thing about loans is they don't show up at all. So the way I would structure it is that loan is going to be paid back when you pass away.
So it works like insurance.
Kind of. That's right. And the thing is, you're still going to make it an arm's length transaction. So you charge an interest rate that's 4%, but it's money that's going from, yourself back to the business that you control. So it's not like it's a bank you're giving it to. You're just paying yourself back.
If you borrow money from yourself, but you don't pay yourself back, will you sue yourself?
Might as well. It depends on the day you're having.
What kind of insurance you got behind?
Yeah, that's right. That's right. Well, so that's the other nice thing too. So each year I can make a loan, and if it's 5% interest, because that's where interest rates are today, if I want to refinance, I refinance with myself, and then I drop it down to 2%. So you control the whole transaction, but now you're at 21%. That's not bad. I love paying less tax. Taxes are fun. We'll get there. They can be fun. But when we do this, right, if I've got a loan, what I can do, because I control the business, is, well, if there's a year that I've got maybe a loss that I can offset because I had a bad year, I'm going to show that loan. I'm going to claim it as income. So then it starts to deplete that. It's not on the books. It doesn't look too wonky. I just forgive the loan because it's myself. And it doesn't show up as income because I had that loss to offset it. So there's a lot of flexibility with what you can do. Kind of neat. Taxes are they're a little fun, but this one's really big. If you think you might sell, that's where I would get in touch with Randolph and say, hey, I think I might have this liquidity event sometime in the next couple of years. What am I doing today to set myself up so I don't pay taxes in the future? Because taxes are elective as long as you plan for them. But if you come to him and say, hey, I'm selling tomorrow, I'm getting my check, he's going to say, that's nice. Did you write another check for the government? Because that's what you're going to have to do. So plan ahead. Plan ahead. That's going to be a big, big one.
What's that cleanup options?
Yeah. So they call it 1202 stock, or you'll also hear it they'll call it qualified small business stock. And that provision, it's actually been around since 1993. So it's not something new, it's just how often do you sell your businesses? Not every day, so you don't run into it as much. Yeah.
As a lawyer, do fiduciaries also have the same knowledge and information you have, and you share with us?
Maybe. Depends on who you work with. So I would say the nice thing about what I do is I don't practice myself. I just educate and motivate. So I would work with your attorney, your CPA, with Randolph as well. And then we would walk through and say, yeah, this is something I would talk to, or this one doesn't make any sense because your situation's different. So yeah, that's why it's nice being part of his team too, because we can say, this is a value-added service being part of this group. So yeah, leverage us. I'll screen my calls in advance. Is that what you're? No, happy to help any way I can.